Okay, so with the recent boom of Bitcoin over the past couple years, it is now safe to do an analysis of Bitcoin mining versus gold mining. So after the 2008 economic crisis, the global mine production of gold steadily increased. In 2008, gold mine production worldwide totaled 2,280 metric tons, and increased to more than 3,000 metric tons in each year since 2015. Alongside mining costs, the United States production value of gold increased from 3.67 billion US dollars in 2005 to a high of 12.6 billion dollars in 2012, and has since then stabilized at around 9.6 billion dollars in 2017. China is currently leading the global gold mine production at an estimated 420 metric tons in 2019. And it is quite ironic that Bitcoin was founded and produced from China. So, gold mining increased in 2020 due to the pandemic, but declined after the Fed raised interest rates in a hawkish sort of manner. The Bitcoin mining business suffered from the current bear market. Although both have questionable sustainability, their revenue streams are actually very different. For thousands of years, gold mining has been a part of human history, but in the 21st century, mining digital assets such as Bitcoin has changed what the term even means. Therefore, a comparison of the two industries' income and sustainability is necessary. Precious metals have long been established as a safeguard against economic instability. According to the U.S. global investors, gold mines had their quote unquote best year during the 2020 COVID pandemic. In the meantime, though, with Bitcoin arriving on the scene with a bang in 2021 and mining prices soaring due to inflation, gold was left close to a bearish extreme. The gold miners ETF GDX ran up 27.6% between January and mid April. After that, the Fed's interest rate hikes in attempt to slow down inflation resulted in gold sharply declining. As opposed to mining for gold, organizations that produce cryptocurrency employ computers to solve challenging computational tasks in order to verify transactions on a blockchain, and thus create new cryptocurrency currencies. Some big names in the crypto mining industry include Riot Blockchain, Hut 8, and even Marathon Digital Holdings. Companies involved in Bitcoin mining suffered in the previous 2 quarters since their revenue is entirely dependent on the spot price of Bitcoin, and Bitcoin has been quite shaky as of late. But according to experts, now may be the ideal time to increase your stake in mining equities. For instance, a global investment community has a favorable outlook on the sector. The community has said that Marathon Digital became the first North American Bitcoin miner to possess over 10,000 Bitcoin on its balance sheet. Marathon's 10,127 Bitcoin holdings have a current market value of roughly $212 million, and could be useful if the company decides to sell some in order to expand the business. So, in conclusion, data on the profitability of gold mining has been recorded for ages, but in the world of finance, digital assets such as Bitcoin are still relatively new. As of 2022, Bitcoin mining requires more energy than gold mining, making it less environmentally friendly. However, a lot of mining firms are working towards zero emissions in the upcoming years. In recent years, the profitability of mining Bitcoin has performed nicely. Sadly, the current bear market has set back performance, but analysis seem to think that this is an ideal opportunity to dig deeper into Bitcoin mining stocks.